Today's Talk About It Tuesday question is, I want to invest in real estate, but I don't have a lot of money. How can I start right now? Love the question because it makes you get super creative and overcome what seems to be a major hurdle. Now, I tell people all the time, real estate costs money, but it doesn't have to cost your money. And to be able to access money is the real trick. Now, obviously, you still have to have skills. You still have to be able to find a good deal. You have to be able to fund the good deal. After negotiating a good deal, you have to be able to get that property into condition quickly, manage that project, do whatever it is you're going to do, whether it's selling it or renting it, and manage that process, right? So there are a lot of skills that have to be developed. So first and foremost, learn and develop those skills that it will take to go from looking, right, all the way to whatever your end goal is with the property. So before you do anything, learn the skills to take it from A to Z. That's important. But I'm going to tell you several different ways to profit from real estate. If you have $10 or even less, how about that, right? If you have no money. So there are different ways to get income. We know that, right? We know, and I'm just going to talk about 5. We have capital appreciation, right? We know that means, and capital appreciation means you buy an asset from one price, you sell it for a higher price. The difference is capital appreciation, right? So in real estate, we normally call that buy and flip. So I'm going to talk about that really quickly. Then we're going to talk about rental income, because those are the 2 most common ways, right? So even if you have no money, how can you get rental income? So we're going to talk about that. Then we're going to talk about interest income, which is less commonly known, profit income, which is not well known, and then royalty income. So we're going to talk about those 5 types of income for real estate if you have little or no money. So let's just talk about the first one. Let's talk about the buy and flip, right? Because most people, for some reason, want to buy and flip. Very lengthy process, very difficult process, not easy to do. However, even if you have no money and you're thinking as an investor, this is not for home buyers. This is definitely not for home buyers. If you find a property, and usually a distressed property, it means the seller has a reason to sell at or below market value. Could be the property's in disrepair. Could be the person's in financial trouble, about to go into foreclosure. Could be some situation like that. But if you find a distressed property that you can get at or below market value, then you can get a hard money loan. So hard money is private money. It's not the traditional banks. Most hard money will give you 65 to 70% LTV, loan to value, meaning they'll only give you 65 to 75% of what the property is worth. Now, what does that mean to you? Okay, that means you would have to come up with 25 to 35% as a down payment. That's a terrible situation to be in. However, there are hard money lenders that will give you 100% LTV and fix-up cost. Now, the issue with hard money is the terms, right? So the terms, they go from 3-month loans to 36-month loans, but most are 1 year. So that means you pay interest only on the loan for 1 year, and then it's a balloon payment. You have to repay the entire thing. So not necessarily an issue if you can manage the project from buying it to fixing it to finding a new buyer and flipping it within a year's time. The interest rates are very high. They can go up to 16%, but the 16% is divided over 12 months. So, but you got to consider that, right? If it's a $100,000 loan, and we'll just use that as an easy number, it's probably going to be way more than that. But if it's $100,000, it's $16,000 interest divided by 12, and each of those, a 12th of that is due every single month. At the end of the year, the whole thing is due, or they can start a foreclosure process. Unless you had an extended loan or some type of rider or something that allows you to extend it at a different interest rate. So quite doable, very challenging as a new person, but you can do it with absolutely zero money. And so when people say I'm going to buy it all cash, that's what they're talking about. They don't have $100,000 cash in their own pocket. They use private money to get it done because you can close in sometimes as fast as a week. 2 weeks, usually no more than a month. You can get that money and get your deal done. So that's how you can do capital appreciation. But let's say you wanted to keep the property. You can do the exact same thing to acquire the property and get it into condition. And then you refinance at the end of the year once you get it occupied. So now your timetable is faster. So you acquire it, you fix it, you got to get it rented, and then you can do a traditional loan with a bank, a 30-year mortgage, right? So pay off the old loan, and now you have a 30-year mortgage, and you can do that based on the income from the property. So again, doable with no money out of your pocket, or if you have very little money, absolutely 100% doable. So those are the most common ways people know. They know buy and flip, buy and hold for rent. There's a thing people keep calling wholesale nowadays. Back in the days, we just called it flipping contracts or selling contracts. So I don't even want to say it because it's so outlandish and so hard to do nowadays. But under certain conditions, it can be done. So a real estate contract is considered personal property. Real estate is considered real property. A contract is considered personal property. Any personal property can be bought, sold, or traded. So if you get a property into contract and you have a great deal on paper, on contract, you can then sell that as long as the language in the contract says that it's assignable, right? So where you sign your name, it must say and or assigns. It must be an assignable contract. You can sell that to an investor for a profit. So we call that profit income. So you can, depending on the demand where you're at, if there's high demand and low inventory, then it's sometimes doable, especially if the person has a trashy lawyer who doesn't make you put down the down payment, right? But it's certainly doable, and you can sell the contract to an investor who thinks the deal is attractive. But super difficult. One of the most hard things to do today. Back in the early 2000s, we used to do that, but everybody's caught on, and so it's very difficult right now. Then we have interest income. So how can you capitalize on interest income? After the Great Recession, one of the best things that ever came out of that was crowdfunding. Since banks weren't lending, you had these organizations come together that pooled together people's money to do real estate loans. And so there are companies, you can Google them online. I don't want to give any particular company a shout out because I'm not going to endorse them. But you can invest as little as $10 for some of them to get started, but you want a diversified portfolio. So usually they say between $2,500 and $5,000 gives you the best diversification in a portfolio. And you can actually have money in a bunch of different loans and gain interest from it. You can get dividend income also from a real estate investment trust. That's another way. Wasn't even going to mention dividends, but you can get dividend income from a REIT. So you can go to any reputable brokerage and put in real estate investment trusts, look at their list of REITs, their past performance, decide to invest in some of those as little as $25 to start, and you can start collecting. They must pay dividends quarterly, maybe even monthly. Some of them even pay monthly, but they must distribute dividends to their investors by law. So there's that. And then I said I'd mention royalty incomes. Most people are like, what? If you own land that has timber or minerals or something mineable, oil, anything like that, you allow a company to mine or cut or drill on your land, and they pay you royalties for that. So there are ways, if you inherited a piece of land and it's has these things on it, you can actually allow a company to do it. You don't have to cut timber, you don't have to dig or do those things. There are companies that do that, and they will pay you royalties for everything that they pull up from your land. So those are some easy ways to jump in, but they all take specialized knowledge, and that's the thing you can't skip over. So make sure you do your homework first. Make sure you understand the entire process from A to Z, from getting in to getting out. Make sure you understand that fully so that you can take advantage of it. And then even in rentals too, you can rent and sublet also. That's another way to get into some things. A lot of people are doing that now. So But again, certain language has to be in the lease agreement for that. But I'd love to hear some of the strategies that you would use to break into real estate investing on a low budget or no money, or how you would do it, or how you have done it and experiences that you faced while doing it. But please like, share, subscribe, and listen. I keep saying that, but you have to do it. That's how the algorithms work. They won't push me out there unless I get some feedback from you. So please like, share, or subscribe, or all of the above. Make a comment, do something so that they know people are actually watching it and engaging, and that you really appreciate this. So please do that for me. Keep the questions coming, and I'll see you next Tuesday.